Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times.
Hello, and welcome back once again to the Fintech Times News and Views podcast. Tom, Francis, it is a brand new week. It's been a busy one, really, but how are you guys doing today?
Yeah, not too bad. It's good to be back. It's nice to actually finally sit down and be talking about fintech again, because we've had a busy week at Fintech Week London, a lot of running around. So it's nice to actually get back to the day job.
Yeah, just want to echo that, really. I mean, it's been non-stop. I mean, you guys were there Monday, or Tom, I think you were there both days at Fintech Week London, right? Polly, you were there Monday, I went on Tuesday. It's been a nice time. I mean, seeing the Tottenham Hotspur Stadium, I mean, as a Brentford fan, I haven't been to the Brentford Stadium in a while, and having the White Hart Lane be the first stadium to go to in a while was a bit disappointing, but I can't lie, that stadium is incredible. So, no, it was a nice time, and it made all the better by the fact there was a really successful event going on.
Absolutely. Well, lots of things to learn from that as well. Lots of interesting conversations to be had. Just generally, it was a really cool event for sure. But we are back talking about fintech on the podcast. So what are you guys going to be discussing this week, Francis?
So this week, I'm going to be discussing Cash-Free Payments' recent launch of a CVV-free card in India.
Awesome. And Tom?
So this week I'm going to be talking about cybersecurity and cyber attacks, largely based on a new report from Krolls.
Fantastic. And I am going to be looking at alternative payments and loyalty cards and embedded banking all in one kind of big soup of an article. But Tom, why don't you go first today?
That'll be a pleasure. So basically, I thought I'd steer the discussion towards cyber attacks this week, because they've hit the headlines a lot in the last few weeks to the last month. And I thought it just coincided quite nicely with Kroll's new report, which is based around organizations' trust in their own cybersecurity. So to give a sort of a quick recap, essentially the media has covered a lot about the Move It attack, which I'm sure a lot of people have heard of. But basically what happened was in a lot of major companies like British Airways, the BBC, and Ofcom, and many more, to be honest, all had employee payroll information stolen from them in cyber attacks. So just to give like a brief overview, basically what happened was a UK-based HR software and payroll provider called Zealous used a service called Move It, which is a file transfer service. And these this threat group, believed to be from Russia, kind of took advantage of a vulnerability in the Move It software, and the hack resulted in a lot of compromised payroll data that Zealous were holding, and all the affected companies use Zealous to hold their payroll information, basically about their employees. So this threat group put up a ransom online on the dark web, telling all the companies to pay them to delete this info, and if they don't get payment, they'll post all of this information about their employees, which includes sort of basically all their personal information, online onto the dark web. And also recently, Microsoft revealed that they had a lot of disruptions and outages with sort of Outlook and its email services at the start of this month. And they've just revealed that was all a direct result of cyber attacks. So I thought the Kroll report basically just leaned quite nicely into that, because that came out very recently. And it basically reveals that 37% of senior security decision makers at big organizations still completely trust that their organization is protected and can successfully defend against all cyber attacks. And that's despite the fact that, there's been so many big, major companies, very rich companies that have spent a lot on cybersecurity, haven't basically done very well, and they've been exploited in some way, and they've lost some sort of information. And the report basically reveals that trust in their sort of ability to defend against cyber attacks is more than the trust that employees have to avoid them. So these decision makers are basically, thinking we're safe, but most employees aren't trusting that they can actually keep the company safe in their roles. So trust in employees was 66%, but the actual trust of employees to sort of identify and prioritize security gaps was 63%. So there's actually less people basically sure they can do the job. Even less people were sure, employees were sure about the effectiveness of the cybersecurity tools and technologies they were using. That's 56%. And basically, the report is just highlighting that a lot of the decision makers are thinking we're fine, we've got the right tech and solutions necessary to keep us safe. But in reality, they probably don't. And the recent news about all these big companies that have sort of been attacked, not through their own vulnerability, but through the vulnerability of a third party provider, I just thought it was really interesting that, despite it literally hitting all the big sort of news and media sites, people still don't necessarily heed the warning. So I thought it would just be good to get your guys' thoughts on, the landscape right now, basically, on and the current climate of cybersecurity and cyber attacks. So, Francis, what did you think about this?
Yeah, no, I thought it was a really interesting article, and I think one of the big things that stood out to me was this idea of outsourcing cybersecurity services. So, in the last paragraph of the article, Jason Smolenoff, the president of cyber risk at Kroll, he sort of explains how specialist support will provide the critical viewpoint needed. And the article says that 98% of those organizations that do not already outsource their cybersecurity services have or are considering plans to do so, with 51% intending to do so in the next 12 months. And I mean, it's kind of just going back to what you said, but 89% of IT and security decision makers say improvement is needed in the transparency between their security teams and security vendors. And I mean, there's clearly a trend in organizations wanting to outsource security to the experts. And I can't really say I blame them, really, because at the end of the day, you know, why try and fight fraudsters yourself, potentially putting your employees at risk and, even consumer data at risk sometimes, when you can let experts deal with it. And, in turn, this bolsters consumer confidence because there isn't a failed attack and their assets are continued to be protected. So I think the issue kind of lies a bit, at least, in sort of negligence from an employee standpoint, in sort of failing to teach yourself, just like failing to teach anything really, in the sense of like, thinking that, oh, because we've outsourced it, it doesn't affect us anymore. I think that's sort of the wrong idea to have. And I think that, more organizations should take more responsibility on themselves, even if they are outsourcing their cybersecurity technology, or, having a third party support it. But generally speaking, I think, it is quite shocking to see that there are this many, successful attacks in the day and age, considering how many, cybersecurity firms we hear about all the latest technologies being announced. But I think there really is sort of, it's a two-sided coin. It can't just be, putting all your eggs in sort of like a third-party cybersecurity firm to, solve all the problems. I mean, sure, not everyone needs to be an expert in it, but I think that more needs to be done from an employer standpoint, just to give their employees more confidence as well.
Yeah, I completely agree. And I think something that I thought was interesting as well was the managing director of cyber risk at Kroll basically said, from his point of view, security teams want solutions that will fix today's problem without appreciating the fact there is no one and done solution for an ever changing landscape. And like you said, companies are quite happy, and organizations, these decision makers, they think we can just use third party providers and third party services to protect us. But in fact, there isn't really a solution, as these sort of vulnerabilities have shown, that have sort of hit the headlines recently, that there is never going to be a one and done solution in the landscape, and people still expect there to be. So I think one of the main problems maybe is just attitude towards cyber attacks, and realizing that because they're ever evolving, that you always need to evolve your solutions and how you're protecting yourself against them. But what do you think, Polly? Do you agree with that?
Yeah, it's really interesting. I think cybersecurity as just like a general topic is such a sticky one to try and get into, because you have to factor in so many different things as an organization to ensure that you are keeping your data secure. Like, there's so many things that you've got to think about. And of course, the threat is constantly changing all the time. Like, you might download or I say you might implement like a piece of security or some software or something that solves against one problem, and then the next day we could have a new problem coming on, like a new trend of cyber attacks. So you just have to constantly be changing to keep up to date with the ever evolving, cyber threats, and to remain fully cyber resilient is just a minefield essentially. So I think it is a difficult spot for companies to be in, and like these different organizations to be in. I think it was interesting how the piece kind of talked about using and working with external partners on this. I think that's an interesting one. Obviously, it's that age old sort of debate throughout business of whether you go in-house or third party. That's not dedicated to cybersecurity, that's not dedicated to fintech. It's just one of those things, and I think it's interesting to think about having that specialist support in place when it comes to cybersecurity and cybersecurity threats. But I guess the kind of the main thing I suppose people or organizations, I should say, need to think about when it is managing sort of cyber risk is the trust, I guess, to put it down in like a very basic level. And in the article, Edward Starkey, who is the associate managing director of cyber risk at Kroll, mentioned sort of things around that. Like, you have to, in order to navigate the current threat landscape, trust is absolutely imperative. You have to trust your team, you have to trust your technology, you have to trust your suppliers. There's a whole thing in there on how you've really just got to trust everyone. But I think that trust has to very much be placed in the right way, and I think security teams need to consider so much different information and so many different considerations when they're trying to implement cybersecurity problems. I think it's what we could talk about it as cybersecurity as a topic just in so many different ways, in so many different styles and patterns and things, because it's changing all the time, and there really is no one and done solution for anything. When we think about this, it's all, you just constantly have to keep up, and you're almost always one step behind as well to the fraudsters or the cyber criminals or whatever you want to call them. It's just that constant cat and mouse catch up game that you're playing. So I think it's difficult for an organization to protect against cyber threats, but obviously one that is very crucial. So it's managing that balance and getting that balance to the point where you are as safe as you possibly can be. But anyway, why don't we move on then to Francis? I'll let you go next. What's your piece on today?
Yeah, cheers, Polly. So, as I said earlier, the title of the article that I'm going to be looking at today is called CVV-free. It's a mouthful. Payments launch goes beyond user convenience. Cash-free payments brings feature to India. So, what the service is in the India-based payments and API banking company, Cash-free Payments has launched the CVV-free card payments for partner businesses. The payments card enables customers to experience faster, smoother, and more convenient checkouts for saved and tokenized cards on a major network such as Visa, MasterCard, and RuPay. So, why I wanted to sort of bring the aim of the card really is to, as I said, introduce a more convenient payment solution, and in turn one that doesn't have as many sort of failed purchasing attempts. Because I mean, we've discussed on the podcast before and on the Fintech Times more generally as well at length, what a failed purchase, or what's the word I'm looking for? It's like a sort of a shopping cart failure, or when the transaction just doesn't go through. More often than not, a consumer would just say, all right, fair enough, and just move on to go somewhere else. And that's losing, valuable consumers. So the aim of the card is to eliminate the need for CVV entry and to, in turn, streamline the process, reducing traction time by up to 5 seconds. It also maintains the highest level of security, ensuring compliance with the Reserve Bank of India's regulations. So the cash-free payment CVV-free feature will be automatically enabled for businesses using its Token Vault solution for the tokenization of cards. Token Vault is a cash-free payments tokenization solution which enables merchants to provision and save card network tokens effortlessly, thereby helping merchants in staying compliant with the Reserve Bank of India's guidelines. So one of the big things to note with this card is that the way it works is, it eliminates the need for cardholders to manually enter the 3 or 6 digit number on the back of their cards. As I mentioned, this can, sometimes result in a payment failure when the number is misinputted, is misinputted. And with this, users can select their saved card and enter a one-time password and complete transactions seamlessly, reducing, as I mentioned, payment failure. But I think what I wanted to discuss with you guys is, I guess it's almost the use of one-time passwords, really. But is entering a one-time password a good or a bad thing when you look at, a card like this? Because in my head, at least, it feels like it could take more effort to check your phone, wait to receive the password, then type it in. And of course, there's a margin for error too when you're typing in that number as well. It's not like that's always going to be, error free. I mean, sure, it's only copying and pasting, but there's always a chance of a mistake. And I mean, if somebody knows their card details off by heart, I mean, I in my head, having a new number that comes up every time is probably more complicated. However, should a card be stolen, it has its benefits that the card can't be used, because without that CVV number and without the one-time password, which of course will come to a secure place like the owner's email or something like that, where they're the ones that are in control, therefore the thieves can't use the card. In that regard, it's also really good. So I just wanted to get your guys' views really, and see what you guys thought. Polly, any thoughts?
I think when it comes to card payments, is a very sort of careful tightrope that you have to follow of both being frictionless and easy to do and like simple and fast, but also being secure. And I think obviously putting in, I think the two-factor authentication, you have pretty much everywhere now on everything. Every time I've made a purchase in the past couple of weeks, it's always been with some sort of two-factor authentication, putting code in to confirm the payment. And is it a pain? Well, yeah, but for the extra, I don't know, 10 seconds it takes for me to do it, at least I know that there's some level of security there. And I think it's interesting to think, if that wasn't there, how else could you make things secure, right? Like, what other options are there to help reduce the friction, but also keep up the highest level of security as is humanly possible, both to make sure people's details aren't getting stolen, but also to make sure that things are complying with regulations. So I think the constant dance that payments have to make in order to be convenient and frictionless and all those other buzzwords, but safe and secure, is a tricky one. And I think it's always trying to make things faster, right? It's always trying to make things faster, smoother. You can save your cards in different places. You can save your card on Apple Pay now, so now I only have to like show my face and then it can make a payment. That's pretty convenient. And now with like the CVV-free payments, that's pretty convenient. And I think it's just a really tricky one to balance that convenience with safety and security. And I guess it'd be interesting to see where payments go. You know what I mean? Like it's I think it's fairly easy to make. Like, we're talking about seconds. Like, literally, we're talking about getting rid of seconds from the payments process. And you kind of step back and wonder, is it worth it? Is it worth putting these solutions in place just to get rid of like 3 seconds in the payments process? And I imagine a lot of people in the fintech industry or the payments industry probably go, yes, it's absolutely worth it, because these are innovative situations, and you want to keep digital payments, getting up to speed and ensure the safety and the convenience for consumers. But it's a really tricky one, I think, and it's a really interesting one to get into, because you almost kind of think, where are payments going to go? Like, we're trying to make them as frictionless as possible. How can you keep going from that? How can you carry on innovating? Sort of thing. So it's a tricky one, I think, but I think it always just comes back to balancing convenience with security. It has to.
Yeah, I definitely think there's like, you brought up a lot of good points, and I think you know you do need to balance convenience with safety. You can't just go down one side or the other, because that just isn't a recipe for success. I don't know. Maybe it's just me. Like, I do see what you're saying in the sense of like, it is just a little bit longer, and in some instances, sure, I do think it would be really good. But like, it's only useful once you've got the card saved somewhere initially. And to have saved it in the first place, you would need to have entered all the details correctly. So in that regard, in my head at least, I mean, sure, if a card is already saved, and then all I need to do is put in the CVV the those 3 to 6 numbers, then more often than not, it almost becomes like a reflex, just to type in those same numbers each time whenever it needs to happen. But I do agree, in some instances, it would be very useful to have, that extra layer of protection. But in others, I don't know. Sometimes I think it might just be a little bit irritating because it's just like a small purchase. Like, if it's not something, you know, detrimentally big or anything like that. It was, like a £5 to £10 purchase off Amazon, for example. Like, theoretically speaking, if it was like that, I think it would just be more of an inconvenience, to have to wait and check and, see all that stuff from. Do you know what I mean? I think that's where, like, there's a potential, a potential call for its flaws, I suppose. But yeah, no, I definitely do agree that in some instances it would be very, very good and to have. And, like you said, it's at the end of the day, it's probably like just a little bit longer off your time, and it does ensure, more security. Tom, what are your thoughts?
Yeah, I feel like you've both hit the nail on the head for all the arguments so far, really. I feel like maybe I'm a bit of a victim to just advertising because I didn't really think about how it might be less convenient. My mind went straight to it's safer than CVV codes because, if you lose your card, they can't make a payment online because they still don't have the code that's being sent to your mobile phone. And you've always got your mobile phone on you. So it's convenient because you're always going to get the code 99 times, 99 times out of 100. You've always got your mobile phone on you now. And I just thought it was a good example of evolving payments to keep people more secure, but also make it more convenient. But I think it's you're right when you say that there are times it's going to be less convenient if you don't have as much signal on your phone, you don't receive the text of your code on, for example. It might cause a problem for you. But I think generally speaking, it's in the right direction. There are obviously going to be circumstances, like you said, for smaller payments. There are a few pounds or equivalent wherever you are in the world. It might be a bit more inconvenient, but I guess it's all down to just making sure that service, sending the one-time password to them in whatever manner that comes, is just successful in most cases, basically. I always thought it could be convenient. If you've got multiple cards, you might not. I tend to only use one card, so I have everything memorized. So it's quite handy just to have the free number code. I've got it in my mind all the time. I remember everything. I can put it in easy checkout every time. But if you've got multiple cards, for example, it could be something that's more convenient because you get cards numbers mixed up, you get the codes mixed up. Getting a code sent, via text or email is just going to be more a better solution, I suppose. So, yeah, I thought it was an interesting kind of topic because, to my mind, I just didn't immediately think of the ways it might not be as convenient. But I think it's just a good example of payments evolving to, as Polly said, kind of try and keep it more secure, but also actually improve convenience and just the speed of payments. So yeah, I thought it was an interesting discussion.
I'm starting to think maybe I'm a bit of a cynic. I feel like every time we talk on the podcast, I'm always the one being like, let me play devil's advocate real quick and let me just explain why it's not good. But no, I think that's a very good point there, is that, like you, I only really use one card. I don't know, Polly, if you're the same. So for me, I've sort of got, as you said, the 3 digits like memorized. So I guess, like, if you're thinking about it from like a personal or I should say like a private business point of view, right? Like a small business card or something like that. Having that availability and that secure way to make a payment, in that instance, I can only ever see it being a benefit. So no, I think there's definitely two sides to this. Probably more so, I think it's just situational. I think that's the crux of it, really, is just that it depends on the situation, what you're trying to use the card for. If it's for a small payment, probably a bit of a pain, but for a bigger payment, perhaps for a business, absolutely, it's got its benefits. But yeah, let's go to the last article, Polly.
Thank you very much. So the last article continues to take us into sort of the payment space. And basically, this piece is how alternative payment and loyalty cards can ensure customer retention in a younger demographic, specifically looking at embedded banking products. So Vodeno and Aon Bank found that customer loyalty has increased when embedding banking in, I can't speak today. So Vodeno and Aon Bank has found that customer loyalty has increased when occur when embedded banking has been used. So they have done a study and found that 2 in 5 consumers have said they'll only remain loyal to brands offering services like buy now pay later and cashback. That figure rises to 50% among 25 to 34-year-olds, but over a third of respondents are more likely to seek a brand that offers flexible payment options, including buy now pay later. So I think, interestingly, the idea around sort of having like an all-in-one, so there's a lot of things going on here, but the idea of having an all-in-one solution in your app or your website or your banking and your branding, that is clear that that's really important to sort of customers based on this study. And as well, it's the idea of having like alternative payment methods. So one thing is loyalty cards and like the value of loyalty cards. So according to the study, the consumers that are more likely to engage with loyalty cards if they include buy now pay later, which was highest amongst the youngest consumers they surveyed, which was 53% for those aged 16 to 24. So it's kind of talking about customer loyalty and customer retention here, which I guess is the big thing that brands need to think about. So when it comes to embedded banking, 16% of customers said that they shop with their favorite brands once every 2 or 3 weeks. However, those who have used their brand's embedded banking product, that rose to 36% that they return to the brand's app or website between 3 and 5 times a month. So it's basically kind of emphasizing the commercial and loyalty benefits of embedded banking here, and that is kind of Vidino and Aon are kind of saying that this is the key for brands to grow and to get that customer loyalty and customer retention. And specifically as well, it helps the business grow on a customer front because 23% of respondents say more likely to recommend a brand to friends and family if a company offers these services, so embedded finance services. So I thought this was interesting as it's kind of talking about embedded banking in a way that, it's not the trending factor at the moment. Like embedded banking is like the buzzword at the moment. I think everyone wants everything embedded. We've just been to Fintech Week London where we've heard so much about embedded banking and embedded finance. Money 2020 a couple of weeks ago, that was all about embedded banking, embedded finance. It's like the only thing everyone's talking about at the moment, which you can see why, because of the significant benefits I think that you can get from embedded banking from a variety of standpoints. So obviously here we're talking about sort of on the consumer front, and for Aon Bank and Vidino, they believe that the benefits of embedded banking can't be ignored when it comes to kind of keeping consumers interested and influencing their loyalty to BaaS-enabled products. And, but specifically with the cost of living crisis at the moment, competition for consumers has never been higher. And as well, consumers are always going to be looking for like the best deal or the best situation for them personally. So when you can offer these flexible payment methods and various different like lending options to provide more choice, all embedded right there in your own solution, it kind of makes sense as to why it's impacting brand loyalty. So I wanted to sort of bring that to you guys because, again, I think this is talking about embedded finance in a way that it's quite relatable, I think, because I don't know about you guys, but embedded finance kind of sometimes goes a little bit over my head. It sounds a very simple thing, and then you start getting into it, and you start talking about it, and it gets a little bit confusing. But from this front, embedded finance is kind of makes sense. It's relatable. It's okay. I understand this from a consumer basis because we are all consumers ourselves. So I wanted to bring this to the table today and kind of talk about what you think embedded banking can do for sort of just general customer retention, customer loyalty in brands, and do you think that we're going to see a lot more embedded banking solutions innovating customer journeys, and is this kind of the next area of disruption in order to get brands loyalty on board? I mean, what do you guys think, Tom?
Yeah, I was actually quite surprised because the article firstly kind of says one of the biggest things that impacts brand loyalty is product prices, and we're all kind of experiencing the effects of living during a cost of living crisis. And I think I was thinking, people's priorities have really shifted because of a cost of living crisis. So, they're always trying to spend the least amount. They're always going to shop around for the best deals. So in terms of a time for brand loyalty, it's actually really tough unless you are the brand that's, having the cheapest prices for all your products. It's going to be quite a tough time. So I was actually quite surprised by the fact that sort of these embedded banking services and sort of the offering of buy now, pay later sort of included within these was interesting because it had more of effect on brand loyalty than I maybe would have expected, at least as far as this report goes. So yeah, I just thought it was really interesting because it had much more an effect than I would have thought. And obviously, convenience goes a long way. People want to come back to the brands that are offering them the biggest sort of flexibility when it comes to spending their money. Obviously, buy now, pay later is a big factor in that because it ensures that you can spread your payments across. You don't have to pay in a lump sum all the time, and having those kind of services embedded is obviously going to make it a lot easier for people to make use of them basically and use them with your brand. But certainly in terms of sort of other aspects of it, as you said, embedded banking can get quite confusing sometimes, and I find that from myself too. But it just surprised me that actually it could have such a big impact on getting increasing the percentages so much, in the sense of improving brand loyalty. So yeah, I just thought it was quite surprising, at least from my standpoint, about how big an impact it could have. And I think this report kind of highlights the fact that embedding these kind of services surely is the future. If it's having such a big impact now, especially during a cost of living crisis, which in my opinion would maybe lessen the impact of embedding these kind of services regarding brand loyalty. And I think it kind of highlights that, maybe when we're not living in a cost of living crisis, however long that might take or when that is, these kind of services could thrive even more and ensure even more brand loyalty. So yeah, that's from my standpoint, I think it surely is the future. In answer to your question.
Yeah, that's really interesting. I think you've kind of hit the nail on the head there, and I guess it kind of harks back to what we were saying for the previous article, in that it all comes down to convenience, right? Like everyone wants everything to be fast and quick and convenient, and if you're like buying something on a website and suddenly it pops up to you like, oh, do you want to pay in three with XXXY buy now pay later company? Oh, would you want to open a credit card with, if that pops up straight to you, it makes sense as to why you're getting, increased customer, because people can do things quickly, they can do things easily. So of course you're going to go back to that brand to purchase things, and you're going to sort of tell everyone that they should do that too, because that's the power of, I think, consumer loyalty, and just generally everything's in the hand of the consumer. So I think brands are going to want to do everything they can in order to get that going. I mean, Francis, what do you think? Do you think is this the big disruptor that everyone keeps saying that it is?
From my point of view, yeah. I mean, the more that I've sort of come to see that, embedded banking and embedded finance, we've sort of spoken about it before. It's one of those things that people a lot of the time don't even realize they're using it, right? It's one of those that, people sort of, you hear the word and you're like, I don't know what that is. But then it turns out that you're using it in your day-to-day life. And I think, just on the sort of topic of loyalty cards, like the article sort of brings up, and it doesn't really surprise me that, we're starting to see more organizations go with this route of, encouraging alternative payments through embedded banking and stuff like that. Because as I said, from a personal point of view, the more I've started to use these technologies myself, the more I'm realizing how useful they can really be. And it really is sort of this idea of, survival of the fittest. And it, when you're talking about a company versus another, and who's going to keep the consumer and who's going to lose out, it really does come down to survival of the fittest. And what I mean by that is, which company is going to be willing to adapt, which company is willing to implement these new technologies and sort of stay ahead of the curve and, keep them relevant, really. And, I think the more that we see organizations sort of tap into embedded banking and really sort of explore its opportunities and, what it can really bring to the table. I mean, it's like you said, Polly, it really does hark back to this idea of convenience. And if you've just got all these different methods sort of at your fingertips, then I don't really see a world in which that reflects badly. I think it's only ever going to be a win for the organizations implementing them.
Yeah, I absolutely agree, and it's one of those things I think we all have to, I guess, see what happens, and not to use the old adage of, oh, well, looking forward to seeing what this is in the future. But I think it is absolutely true, and I think embedded finance is one of those things that's just really going to come into its own a lot of times the more we're thinking about it. But thank you guys for that really interesting discussion. It has been fantastic today. If you want to hear more about anything we've spoken about on the podcast today, or any more news and insights about the fintech world, head on over to fintechtimes.com. You can read plenty more articles, features, and all sorts of wonderful things over there. And very quickly, let's move on to what I learned this week. So each week, so much new news, information, and insights across our desk, being on the Fintech Times editorial team, that we are learning something new all the time. So we thought it'd be fun to share that with our listeners. So Tom, what have you learned this week?
Yes, this week I learnt that 1 in 10 UK graduates fear AI replacing their job role, which ranks it alongside some of the traditional concerns such as low pay or feeling underqualified. And this is a new research from the CFA Institute. And I just thought that was interesting because it shows how quickly AI is becoming such a concern for people just regarding their everyday jobs. And they're ranking it, it's growing so rapidly, this sort of concern, and it's nearly catching up to the likes of, feeling underpaid or feeling underqualified.
Awesome. And then Francis, what have you learned this week?
I think it would be rude not to bring up Fintech Week London. So I think one of the biggest takeaways that I got from it, or one of the stats that I found most interesting, was on day one of the event. And it was when Matthew Long, the Director of Payments and Digital Assets of the FCA, talked about the opportunities of crypto. And he explained how recent FCA research has shown that 1 in 10 people in the UK have some form of crypto. And I mean, with everything that's going on in the crypto world, 1 in 10, I don't know. I just thought it was quite an interesting stat.
That is pretty interesting. And then mine also comes from Fintech Week London. So this is a quote that I just really wanted to share because I loved it. And it was from a panel organised by Julia Streets. And it was said by Damon Bamra. I will admit I was not there for this panel, but I have seen it later in roundups. I just think it's fantastic. It's about embedded finance again. But essentially, they said embedded finance is essentially when your parents and their parents before them and their forefathers all bank with Barclays. Barclays is embedded into your family, and if you try to go to Nationwide, you're going to be excommunicated from your family. Even if they offer you financial incentives, you can't do it if you love your family. And I just thought that was a really fantastic take and a new definition of embedded finance that I've not heard before. So very much enjoyed. But anyway, guys, thank you so much for joining me once again on the podcast. It has been a blast talking about fintech with you, and hopefully we have a bit more of a chill week, I think, after the craziness that was Fintech Week London. So I'll catch you on the next one.
See you guys next week.
See you guys then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.